is so cool. We've got 6 weeks of gains for the Bulls. We love our Bears too, though, but let's break down today's action with Bob Dahl. He's Nuveen Asset Management Chief Equity Strategist. He's got four stocks, Bob, that you're bringing with your portfolio. For our viewers, you can't afford to miss. And Teddy Weisberg is on the floor of the New York Stock Exchange. And we also wanted to bring in Larry Shover in the pits of the CME because all three of you, what a day we have here, capping off quite a robust 6 weeks. We'll start with Larry at the CME. What really drove this trade when you could say the import-export numbers weren't so great and that there was some data that was a little noisy?
Yeah, it's a great question. I think there's just so much negativity. So many people still don't believe. So many people still think that the Yellen is dovish quote was enough to underpin the risk sentiment in the market. And I think they're mistaken. I mean, the fact is we are in the middle of a secular bull market and people are still unwilling to catch on. And I think it's just driving this pain trade higher and higher, as you mentioned, over the last 6 weeks.
Well, we got a couple of bulls, but I would call Teddy Weisberg and Bob Dahl sober bulls. We've had a lot of kind of drunken bulls staggering through this place, but these guys are sober bulls. And I want to go to you, Teddy, first, because we did have some kind of disturbing figures from Gallup poll about how much consumers would be buying in the holiday season. They see a drop of 10% over the last year. Could that put a little cloud over this party?
Well, I think it certainly could, but then you had Macy's earnings earlier in the week, and they just blew the numbers out. And, I mean, if that isn't a lightning rod for the consumer sentiment, I don't know what is.
So
I mean,
hold on a second, believe the numbers, the hard numbers, rather than the polls, is what you're saying.
Well, I think, I mean, how can you deny the numbers? I mean, you have the polls, you have the numbers, but the reality is, Macy's as a company appeals to a pretty broad base of our consumer society. It's only one company, granted, but it's a pretty good lightning rod, and perhaps it sets us up well for a very good Christmas. David, it's the anemic numbers. It's the 2 steps forward, 1 step backwards with these economic numbers, reinforced by this easy Fed policy, which probably will in all likelihood be continued under Yellen. I mean, it's a positive quotient for a terrific market, creates an underlying bid for stocks, and we've seen that now, not only for weeks, but for months, going on a couple of years.
But does it worry a guy like Bob Dahl, who has client money to put to work here, Bob? And you've been a bull, correctly so, during the time where it mattered to be a bull, and that's this run-up. What are you doing now? What are you advising your clients?
Still to own stocks, Liz. As people have mentioned, the fundamentals are reasonably good. People still don't believe it. And I think another point with the consumer is the drop in gasoline prices, which puts more money in their pocket to spend on Christmas presents, et cetera, et cetera. We still have, as was mentioned, a very accommodative Fed. We have valuations that are not ridiculous compared to the alternatives. And so I think the path of least resistance will still be to the upside. As you pointed out, it's 6 up weeks in a row. Stocks don't go up every week. We'll have a pause at some point in time, but pullbacks are buying opportunities with that range of fundamentals, in my view, Liz.
Bob, rates are still a big story in many ways. I understand that obviously the numbers matter and the earnings matter a lot. But what happens to interest rates and how might that affect the market?
Well, if interest rates go up, that'll mean we have a strong economy and we'll get better earnings. So I'm not overly concerned about Fed tapering. The Fed showed us in September that they won't do it unless conditions are good enough. And if we have those good conditions, I'll win on the E side, the earnings side. And if the economy stays weakish, the Fed won't taper, and I'll win on the PE side. So I don't want to make it seem like stocks can only and ever go up, but I think the consternation for an equity guy around interest rates is a bit overdone.
Well, we saw, Larry Shover, what happened when interest rates started to tick up back in late May, early June, after Ben Bernanke telegraphed that we might start to see tapering at some point, that it would be a reality. I don't know why people were freaked out about that. It was ridiculous. There is an end game to this, we certainly hope. But what do the guys in the pits think? What would be the sector, aside from home building, that might benefit or get hurt if we start to see higher interest rates?
Yeah, I still think that Pitt believes that even if interest rates creep higher, as long as they creep higher for the right reasons, you still need to be in financials and materials. Now, financials was one of the areas where I was dead wrong about until most recently. I've been wrong about a lot this year, but financials was one where it's regurgitated, consolidated, and has made new highs, even yesterday, the XLF per se. But financials, materials, because the housing sector is still in the baby steps of a recovery. On the periphery, I mean, the best part of real estate has increased quite substantially, but there's still a large part of the real estate market that has not caught up, and it will do so even with rates climbing because we are recovering slightly but surely.
All right, let's round out the rate discussion with Teddy here. Teddy, are you as calm about rates going up as Bob is?
Well, I think I see it as a two-step process. I think in the short term, any shift in Fed policy which results in higher rates is going to be a big problem for the market. But overall, it is a positive because if rates go up because the economy is doing better, that translates into better corporate earnings and ultimately translates into a higher stock market. But if we accept the premise that it's basically been easy Fed monetary policies that have been the underlying bid for equities going back for now almost 3 years now, any shift in that policy short term is not going to be a good thing for stocks.
Let's get some names from Bob Dahl, because Bob, you could look at the NASDAQ and see that it's hitting a 13-year high. It is technology heavy. Let's start with technology. Give us your picks here in this realm and why you like these names.
Yeah, I picked two, as you know, Liz, two from very opposite end of the spectrum. One, you have to hold your nose because the PE's up there, and that's Google. They're in the forefront of a lot of good things happening. The other, you also have to hold your nose because you don't know if you're going to get any top-line growth. You have to depend on the margin story, and that's Hewlett-Packard. And so I think that it's an interesting pair in a sector that I think deserves a lot of attention.
Can I just get you on Google with the price-to-earnings ratio? This is a leadership company. When you're picking stocks, do you look at the names that are best in class, as Buffett does, with that moat of competitive strength?
Well, I try to, Liz, and Google, I think, does fit that, although Hewlett-Packard, there are lots of competitors in that difficult business. So it's not the only way we look at stocks, but in Google's case, if you're going to pay up for a stock, if you're going to pay a high valuation, there better be a moat some way, somehow, to justify that valuation.
By the way, Larry, Bob mentioned something earlier that the fall in gasoline prices has helped retail sales as well. Are we going to continue to see that fall first in oil and then in gas?
I don't think so. I mean, I think we're the beginning of the end of the fall. I mean, there's going to be supply issues coming from OPEC, a lot more reliance on Brent crude as opposed to WTI. On our end, WTI is congested right now, and with the price going down below the price point of producers, they're going to start or they're going to stop refining as quickly as they have before. So long story short, they're below the break-even point. I think we've seen the bottom in gasoline prices.
What a great forecast, guys, and a great wrap-up of the week.
Indeed.
Good stuff.
Smart people, successful people. Bob Dahl, Teddy Weisberg, and Larry Schover.
Have a great weekend, guys.